YouTube, it's Tone. I'm back with another one. And today we're gonna talk about what is it? Talk about the loans, the bank loan lies, and how that shit works, and how they go about tricking everybody into becoming a tenant, and essentially allowing the bank to put a lien on property that you already paid for as soon as you sign the fucking documentation. You got to pay attention to the paperwork that you're signing, because you're gonna sign. As soon as you sign the paperwork, the shit is already paid for. You're gonna see it's at the end of the process that you're gonna sign the lien documentation and allow them to put a lien on it after it's already paid, because you signed for it prior to that. At the end, you're gonna sign the lien documentation in order for them to put a lien on the house that you already own, to make you a subject to them, and for them to use your property as collateral to be able to put out future loans. So they can put out 10 times whatever the value of your collateral is that you're lending them. Right? So, and the house is already paid for. So here it says, let me get this thing together here. All right, so here it says, now it's time for you to discover what you were never supposed to know. The truth about any alleged loan you ever received from any bank or other lending institution has been carefully hidden, carefully kept out of your education, so it's not your fault that you haven't heard the following information before. You're not ever supposed to know, but if you can read now, you will know. The bank or credit card company advertises to loan you money. If I were to loan you $100, my assets would decrease $100. When a bank or other lending institution lends to you or anyone else, their assets actually increase. The Federal Reserve Bank of Chicago used to publish modern money mechanics, which is like a banking manual, if you will. They stopped largely because of this quote from page 6, the last paragraph. What the banks, do when they make loans is to accept promissory notes in exchange for credits to the borrower's transaction accounts. Loans, assets, and deposits, liabilities, both rise the amount of the loan. Now, when was the last time you lent money to a friend and suddenly found out that you had more funds? So the lending institutions, including credit card companies, accept promissory notes, which is what Federal Reserve notes are, in exchange for credits to the borrower's transaction accounts. What exactly does that mean? So we're going to get into what that shit means. Let's see what we got here. So the second part of the page here that we have is so it says accepting your promissory note. Now, when the lending institution accepts your promissory note in exchange for credit to your transaction accounts, that means that they add money, they credit money to your checking accounts, but not the ones that you know you have. The funds for the addition to the secret account came from depositing your promissory note. Except the credit card companies actually deposit your application agreement and monetize it even if you are not approved. Again, you provide the source of funds that are deposited into your account. How can they do that? Well, they are bankers. Your promissory note is a note. So it's a promissory note. It's a promise to pay. So it hasn't been paid yet. That's how that's working. And then here it says, let's get into this. Here it says, look at a dollar bill. It says Federal Reserve note on it, doesn't it? You bet. See, a note, according to the Dictionary of Banking Terms, 4th edition by Thomas P. Fitch, is legal evidence of a debt or obligation to IOU. That means that a note is owing money. That means that what we call money or cash today is really owing money. So since money nowadays means owing money, and your promissory note is legal evidence of a debt or obligation owing money, that counts as money and can be deposited. If you have any loan agreements or a copy of any of your promissory notes to hand, I would suggest that you read it over carefully. Here's why. Nowhere in your agreement does it tell you that the lending institution who provide the funds was going to not loan you money, but use your own note to fund the loan back to you. Nowhere does it tell you that according to their own bookkeeping entries, the bank was going to make you provide the value for your own loan first. And so that's what happens when you sign a all of your loan documentation and all that first, prior to actually at the end of the process allowing them to put a lien on it and essentially making you subject to the taxes that they're supposed to be paying for. Because that shit is supposed to be on them since you're lending them the money. And then here, go to the last part of this page. It says their bookkeeping entries tell the truth about what happened. Nowhere in the agreement or note does the bank say that they're going to alter the note in violation of UCC 3-407, by the way, and change it into a draft after you sign it so that it modifies in any respect the obligation of a party. And they do it by an unauthorized addition to words to an incomplete instrument relating to the obligation of the party. Those words are paid to the order of. Either way, and even without those words, they can deposit the note, which is legal evidence of a debt or obligation, into your transaction accounts that you don't even know you have. And now I don't think they even give you a deposit receipt. The current banking system has redefined money as owing money, so they can apparently do it, but they still haven't given any consideration for the alleged loan, have they? No. And that's against contract law, which basically says that there must be valuable consideration from both sides. Both or all parties involved in an agreement for an agreement to be valid. And contract law also gives the requirements of contracts so they may be valid and enforceable. So they don't have an enforceable contract on any of the mortgages because they really didn't do shit. They don't have any skin in the game at all. They don't do a fucking thing. They don't do shit. You're the one that funds the money. Your money is the signature. You are the value. You can't cash that monopoly money in for anything other than, or to anybody that doesn't fucking believe that it actually has value. And that's the only reason why people are even taking it, essentially, because they make people take it by force, essentially. Whoever doesn't like taking American Federal Reserve notes, they end up getting fucking invaded and they get freedom. Freedom, that's with air quotes, right? So that's essentially what that's all backed by, because it's not backed by gold. And a promissory note is just a promise to pay. They're all IOUs. So all you people out there taking pictures with all that green paper, that's a bunch of IOUs. Just keep that in mind. You guys should start fucking reading a book. So, this is a little bit of information to help you understand what it is that actually happens when you go to sign for a mortgage and things like that, and why it's so easy to bring these people to court and have them have to fucking sign that title over to you because you don't owe them shit. You already paid for it. If anything, they owe you money, because if you do a forensic audit on that fucking account, what you're gonna see is that the money came out of fucking thin air as soon as you sign that piece of paper. They're not gonna be. But you always want to make sure that you give them an opportunity to prove that they did pull the money from a certain account to lend it to you or whatever and things like that. Because maybe that does happen, but I highly doubt it. So, when you look into the bookkeeping that they're keeping, you're going to be able to see exactly what's going on there. And so the money doesn't appear in anybody's account until you sign that paper. You are the creator of that value. It's not them. So just keep that in mind. So that's what I got for you for now. So until we meet again.